Today I want to talk about how to use Bollinger Bands in your Forex trading. Now, to be perfectly honest, I do not use Bollinger Bands typically as a type of indicator to give me an entry point. I'm going to go over a strategy here with you today where you could do that. What I really use Bollinger Bands for, however, is to show me areas where I know I do not want to enter a trade and to show me areas where I should take potential profits. So here I have the Euro USD pulled up. We're going to take a look at it. And I'm going to start right in probably this area right here to kind of go through some potential trade setups with you. And what you can see is you have a downtrend right here in this dotted line, this 21 area here where you got the mean on this Bollinger Band. Now, if you do not know how to set the indicator up like I have on the screen, in the description below, I show you how to set up all of my indicators, and that will give you an idea of the best ways to try to get these set up for you. So as you see, we got to move down here. We got a downtrend. It's kind of leveled out here, flattened out, which is a little bit of a warning sign that we're not sure what's going to happen next. It looks like I can't see any further back on this chart. It looks like we were coming off an uptrend, a down. So it's there's a potential it could head back up again if you're looking at more Elliott wave type of movement. As you know, stocks do not move in straight lines. They go up, down, up, down. So you have to watch for those waves, and you can help identify those in your trends. So, if you've got an uptrend and you're moving down, you've got to be careful not to jump on that downtrend too fast because it may simply be a relieving some of that pressure so they can go back up again. So here we got two candles going down pretty hard. It hits this 1 ATR band. There's no real trade here. You could potentially have taken a trade right here, assuming this downtrend is still into effect. As it came back up to this mean, you could have gone short here. Had you decided to do that, then your targets would have been this 1 ATR, this 2 ATR and this 3 ATR range, which you didn't really ever hit it. Your signal to get out right here probably would have been this candle, and that would have moved your stops down to in this area where you've got a lot of price action that's been rejected. So I'd move my stops down here, probably got out right here, got stopped out for a decent little profit coming down from here into this area. Now I've got a downtrend. I'm at the 1 ATR band. This is not an area I want to go short. This candle right here is a tempting short, but remember you're at a 1 ATR band already. This up here is really where you want to be going short. So if I could have placed a short entry right here and gone short with a stop above this 1 ATR, I could have waited for a candle that let me believe that it's headed back down. I probably would have placed a trade off of this candle into this area, which would not have gotten hit, and then I would have placed a trade for the low of this candle, which would have gotten me into the trade with a stop about right here over this 1 ATR line. It would have been very close to getting stopped out here, but if you set it just a tad above this ATR band and above this previous highs, you would have still been in this trade. And you would have taken this trade, down through the mean, let it bounce, and taken partial profit probably right here at this 2 ATR band. Certainly you would have taken partial or complete profit here at this 2 and 3 bands. I try to urge people to take partial profits when it hits the 2 ATR, but keep some of the position open, just move your stop to break even. When you hit the 3 ATR band, normally you're going to get a reversal here. And for this video, I'm only trading with the trend. There are strategies you could use to a counter trend trade back up into the mean. I'm going to do a separate video on that, but right now we're just going to concentrate on going with the trend. So I've got the trend here still going down. I'm out of the trade. I'm going to put another sell order right in this area. Would have got hit right here, and I would have went short again. This is a big down candle, or it was a big down candle until it reversed. It probably would have been a good idea if you've been watching this trade to take some profit right here just because of the size of this move and how much this 2 ATR band flared out away from it. To get some partial profit here, move your stop to break even. Had you chose not to do that, say you looked at it that night, you can't trade all the time. Well, when I saw this candle up here, I would have moved my stop immediately to break even. So what would have happened eventually is I would have got out at break even. I would have been looking for a re-entry on this candle. Had I gotten out completely here and put another sell here, I would have had my stop here, which means I would have got stopped out for a loss. Had I stayed in this trade and gotten out for a small profit, then I'd have been looking for a re-entry in this area. This candle is a nice looking candle to go to put as your short entry, which would have taken me short again down to here's the 2 and 3 ATR. These would have been perfect profit areas for you to get out of this trade. If you had wanted to get back in it again, you would have had you could have either put a sell order here, or you could have put a sell order after you saw this candle, which would have taken you back to at least partial profit zones here at 2 ATR. I probably would have gotten completely out based on this indecision candle, mainly because I'm at a 2 ATR pushing the 3 ATR. If I had determined that I was going to get back short again, I would have had a short entry here. Keep in mind there's a little bit of a movement here that might have caused you to pause and not enter the trade. But had you entered it, you would have got short here. You'd have immediately been stopped out right here. And that's very important. All trading strategies lose money from time to time. If somebody tells you they're giving you a strategy that never loses any money, they're lying to you. Yeah, if right here, this strategy, depending on how these candles played out for you, if you had gotten short, you'd have lost money here. It wouldn't have been a lot, because especially when you look at all the gains you've had coming down through here. But it is something to keep in mind that you've got to hold those stops. And if this is where your stop is, and you get stopped out, then you just got stopped out. You're not going to win on every single trade, on any strategy or any indicator you use, and there's no trader out there that it is going to be successful 100% of the time. You have to be successful on a good percentage of your trades, and you have to win more when you win than you lose when you lose. So here we got stopped out. We know we don't want to do anything through here because we're at the 2 and 3 ATR. This is not a good point to go long if you're here. You're seeing the move, the trend starting back up. And so what you've got to do here is make a decision. Is this a long? The trend's moving up. It's in the ATR. It's in the median range that we look for. You could go long right here with a stop below this, below the 1 ATR band at the bottom. You would have been successful at the 2 ATR. You hit it 3 times, give you a chance to get out. I may or may not have taken that trade. One thing that would have concerned me here is my trend had been down. I'm coming up. So is this a new trend, or is this just a correction before another downtrend? In all honesty, had I been trading the euro during this time period, I probably would have counter trend traded back to the mean as opposed to looking for a long. However, if you had determined you wanted to trade this, you would have made money on it. And you would have made money if you treated it as a counter trend. And all you're looking at is the Bollinger Bands, and they're giving you all the information you need to make those trades. Back through here, you could have decided you wanted to go long again here, but you would have been stopped out down here. But I want you to look at these candles. I mean, these are ugly candles, to go long on, especially knowing that the previous trend was down. So if you had just had an order out there sitting that took you long, your initial stop would have been right through here. After I saw these 2 candles, I probably would have moved my stop up to here. And then you would have got stopped out right here on this candle. But you had plenty of warning here that this could go further south. Plus you had this large red candle, which a lot of times there's follow through with those. You get a large red candle like this, you typically will see more downward momentum. You didn't get a tremendous amount here, and you didn't really get any here, although it did come down a little. But it is something to watch out for before you jump into a long. Is this really the long you want with this down candle, even though it is to the median, to the mean here, but with a previous downtrend? You really want to go long there. If you did, I would have gotten. If you went long, you would have gotten stopped out right through here. But hopefully you would have moved your stop up to here. Now you've got to move down. You can't take this. It's beyond the 2 ATR. You might have been able to get into it right through here, or you may have decided either on this candle or this candle. Anything below that you wanted to go short based on it going back to the previous trend. My stop probably would have been right through here, which was the high of this candle. It's a little too far away for me up here. And just putting it right above the mean here, you have a strong likelihood of getting stopped out. So this candle right here to me would have been signaling further downward pressure. This candle certainly did. You would have gone down, stop up in here. You would have watched it. You got a 2 ATR here, 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 and here. Move back to the 1 ATR and then a drop to the 2 to the 3. All of these are profit taking areas. This candle right here, as it hit the 3 ATR and bounced up, this is a candle here that looks to me like it's telling you it's going to revert back to the mean. So you really got to pay attention to that and close this trade. You want to go short again? Again, be careful with this candle because those long candles like that sometimes have follow through. This one did, but had you decided to go short in here automatically, you just had the order out there sitting, and you had your stop just slightly above your 1 ATR, you may or may not have got stopped out. If you did get stopped out, it would have been for a fairly small loss. If you didn't, you're in this trade moving down, and you're going to be at the 1 ATR here. There's a little chance for profit there, at least partial profit. You may have decided to stop out here with the remainder, or you may have decided to add and go down to the 2 and 3 ATR going back down. Yeah, the point is that what trying to trend trade with Bollinger Bands tells you is, you do not want to go long when you're pushing up through these ATR bands. If you're going to go long, you want to be around the mean right here. And same goes for going short. You do not want to go short here. You do not want to go short here. You want to go short in this area. Because if you go short here and you get stopped out up here, that's a lot bigger loss than going short here and getting stopped out up here. And that's probably some of the most important things that I take from Bollinger Bands. As I said at the beginning of the video, I do not typically use them as an entry signal. You could, and that's fine. It did work and it does work. But I would use them as a confirmation signal, and I would use them as a profit target area and an area telling me areas I do not want to get in the trade. So I would probably find this on a different indicator or a different scan. And then I'd come to this chart because I typically keep about 3 charts up with different indicators as I watch these securities to determine my entries and exit points. So like I said, you could make a strategy out of it, and I did give you the very basics of a strategy that you could use entry points from Bollinger's. But more importantly, I hope that I've told you the areas you don't want to be going long as you're pushing these down, and the areas that are better if you're going to enter a trade when you're trading back to the mean, and watching these trend lines. And one reason I used the Forex or the Euro USD is because Forex tends to trend a little better. You can use this on any stock, but some stocks are very choppy. They just go up and down constantly, and it's a lot harder to get entry points using Bollinger Bands when they're that choppy. With the Forex, since it does trend better, you could determine entry points using nothing but Bollinger's. If you have any questions, let me know. Please like this video. Please subscribe to the channel, and I hope to hear from you soon.